And so you'll go from 150 billion to 1.5 trillion. And when they start issuing in that size, you'll see Amazon and Google and Microsoft using stable coin for international remittance and corporate remittance. And then you'll see it get built into Apple Pay and Google Pay and Amazon as a payment method. Right. And then you will actually see billions of people using this stuff instead of hundreds of millions or tens of millions. The clock back 6 months, the president's working group put out a memo on stablecoins. And when they put out the memo, they said, we'd like for FDIC institutions to issue stablecoin. Now, putting aside whether you agree with that or not, there's been a regulatory deadlock on Capitol Hill, because in the 6 months after they put out that memo saying they think that banks should issue stablecoins, no bank issued a stablecoin. And that's because the president's working group memo said, well, Congress should pass the law making this clear. And until then, we'll think of it this way. So the banks are waiting for Congress to pass the law. Congress didn't pass the law. And all the way up until last month, there's really no clear consensus to move on this. And we didn't expect any clear legislation or regulation before 2023 or 2024. So I think that crypto crash and the UST crash has simultaneously educated the existing crypto market and all the investors. It's also introduced, the concept of risk. There are different, not everything is equal, right? There are 19,500 things, on CoinMarketCap, but they're not all equal. So to say, well, this is risk-free or that is, they all have different flavors of risk, but how do you assess the risk? I think that the industry is getting more sophisticated. I think that the regulators now have some pressure. The Secretary of the Treasury was in a congressional hearing with Senator Toomey, and he's been an advocate of some stablecoin legislation. And he asked her, you think we need to get it done this year? And she said, yeah, I think we can and should get it done this year. So the consensus among the regulators and the politicians is, yeah, we probably need to do this. Now, you could say, if you're the crypto anarchist, I hate regulators, I don't want them to do anything. Well, that's one way to view it. But as long as they don't do anything, the industry stays $1 trillion, $1, $2, $3 trillion. When they do something, then you're going to see people like, let's say David Solomon was on CNBC last week. He's the CEO of Goldman Sachs. Well, whatever Goldman Sachs thinks is probably what JP Morgan thinks and Citigroup thinks and Bank of America thinks and Wells Fargo thinks. So what he says is, yeah, we know the crypto economy's here to stay. We can't custody it yet. We're afraid to custody these assets. Like we're not allowed. His actual words were, "We're not allowed to."
Right.
And if I speak to CEOs of publicly traded companies and banks, like publicly traded banks, they'll say, our regulators won't let us. So you see the conundrum here, which is you could either stay in a regulatory gray zone where there's about 1% of the money. You can be 1 or 2% of what you're going to be, and you can stay in the gray zone. Or you can create a clear public policy framework, and then you move into this compliant zone. And when Goldman Sachs and JP Morgan enter the space, they'll issue $500 billion of stable coin, trillions of dollars. And so you'll go from 150 billion to 1.5 trillion. And when they start issuing in that size, you'll see Amazon and Google and Microsoft using stable coin for international remittance and corporate remittance. And then you'll see Google Pay and Amazon as a payment method, right? And then you will actually see billions of people using this stuff instead of hundreds of millions or tens of millions. I think that the consensus is the regulators need to provide more clarity on this issue of stable coins, and they also need to provide more clarity on was a crypto security. The reason it's a security is there's an issuer and there's someone that can make decisions. So I think that this is going to accelerate that regulation. It'll accelerate the regulation of the crypto securities, and which are many of them are unregistered securities, and there's no disclosure. It'll accelerate the regulation of the exchanges. It'll accelerate the regulation of the stable coin. And in the near term, there'll be a shakeout. So, some things, when you look at them in the light of day, you'll say, for example, what's a shakeout? I decide I like Circle better than I like UST. That's a shakeout, right?
Mm-hmm.
Right. And it'll also create an on-ramp for institutional intervention, because you've got $300 trillion worth of money, that's $100 trillion of bonds, $100 trillion of equities, $90 trillion of currency derivatives, all sorts of forms of money. You've got other sorts of derivatives. They're all sitting out in the mainstream economy. And if you might have seen my tweet of Ken Griffin. Ken Griffin gave a speech last week to Bloomberg, and they asked him about crypto, and he said, look, the market deserves clarity from the SEC or the CFTC. What's a security? What's a commodity? And every day, ETFs publish their holdings. If you own it, and there's thousands of ETFs. ETFs are kind of like they're derivative securities of sorts. So, if I can buy an ETF and every day they tell me what their holdings are, then I can get comfortable trading it, shorting it, going long it, holding it, et cetera. So his view was, why can't we see the same disclosure on something like a stable coin, right? We should get some periodic disclosure. And then he ended his discussion with kind of like a degree of frustration, like it's overdue, like it's time to stop screwing around. And if we have regulatory clarity, it's going to open the way for tier one firms like his own, like Citadel. But what he really means is Goldman Sachs, JP Morgan, Citigroup, Bank of America, Wells Fargo, Citadel, all of Wall Street. It'll open the way for them to make markets, do research, right? And to provide liquidity. And provide liquidity eventually means loans, and as well as hold on their balance sheets.
Right.
And they're not going to do it as long as they don't know the difference between a commodity and a security, and they don't actually understand the legal status of these things. So ultimately, what you've got is a $1 trillion industry that'll become a $10 trillion industry if we have regulatory clarity, and then it will become a 20, and then a 30. There's no reason it can't go from $1 trillion to $100 trillion, but you've got to work through these issues.